What's up everyone, welcome back to Earn It, Save and Invest It. This video I'm going to go over how war can affect the stock market prices. This is going to be based on the S&P 500. As you know, we got into a conflict with Iran, so I'm going to go over what the stock markets should be expected to do based on historical events, right, of the other wars. So if you can, please give me a like and subscribe. I'd really appreciate it, but let's get right into it. So how does war affect the stock market? The war in Afghanistan was 2001 to 2021. Also, the tech bubble bursted, so it was down 46% in 917 days, and it did take 2,450 days for it to go back into the profit. And then right after that, the great financial crisis happened, and it went back down. So, I mean, it was intense. Like, if you bought at the peak, right when the war in Afghanistan started, right when 9/11 happened, all that, you didn't make any money for about 20 years. The Gulf War, about 13 years. The Gulf War, 1990, 1991, went down 15% in about 70 days, and then 0% in 189 days. So again, it took 189 days for it to fully recover from when it started to go down. Vietnam War, it actually did not go down. It was on its way up during the start of the war, but it was bumpy for many years, and so it took 945 days for it to actually go profitable and not return back to that level. Korean War, 1950 to 53, went down 12% in 28 days, but it took 168 days for it to recover back into the profit. World War II, from 41 to 45, it went down 20% in 147 days, and it took 378 days for it to recover those losses. Historically, the U.S. stock market often experiences an immediate short-term dip following the news of a bombing or a start of a war, but typically recovers and even rallies in the following months. This pattern, sometimes called the war puzzle, suggests that markets fear uncertainty leading up to conflict more than the conflict itself. You have to remember, stock market's very emotional, and it's always trying to think ahead. So the immediate versus the long-term impact. Short-term reaction, right? Significant geopolitical shocks like Pearl Harbor or 9/11 can cause an immediate move just on the downside, right? And people go into gold and oil prices surge, and that's kind of what's happening now, right? The oil prices are going up. In Pearl Harbor, the Dow went down 3.5% on the first day after the attack. Korean War, market dropped 5% the day after it began. And Iran, most recently, it went down 0.5%, and the Dow dropped 1%. I mean, we're looking at these numbers, and this is actually kind of like child's play from what we're used to now. The historical recovery on average S&P 500 has been 0.3 lower 1 week after the major geopolitical event, but 7.7 higher 12 months later. So obviously, after the week of the big event happening, the stock market really doesn't do much. It may go down really quick, and then it kind of recovers, and that's kind of what happened, right? Monday, the stock market dipped, and now we're kind of back to where we were. The long-term performance, major U.S. wars have historically coincided with strong market returns. World War II, the S&P returned 16.9% over the course of the war. Vietnam, stocks rose 6.4% on an annualized basis, and the Gulf War, S&P rose 18.2% in 3 months following the start of the conflict. And this is just kind of the performances 3 months before, how it was going 3 months after, and then the total annualized return. And as you can see, throughout the wars, it's just been positive on an annualized basis. Defense stocks, energy stocks, and safe haven like gold, US dollar, silver, that kind of stuff is always seen as, safe, and people want to start investing into that because it's just seen as something that's safer rather than the growth, because people think growth might stop. And then again, clarity is often the primary driver of a market rally after a conflict begins. The stock market in general is looking forward, and the more clarity it has, the better it can perform. President Trump released a video basically saying it should take about 4 weeks or less for this whole war to kind of complete. So we're going to see exactly if that holds true. This was kind of like one of the first days. Live updates of attacks on Iran intensified. It takes the first casualties, and then recently the U.S. says we're going to strike deeper into Iran. So it doesn't seem like it's exactly ending right now or anytime soon. We do have Israel said it's launching strikes on Tehran, and Iran launched some strikes and it hit an Amazon data center. So now not only is it just oil and all these other things getting involved, Amazon is actually physically getting bombed. Then we have Trump's powers. Republicans rejected a resolution aimed at Donald Trump to seek congressional approval for future U.S. military action against Tehran. And so, you know, that's just them saying, like, you know, they don't really want to be going too much into it, but they also do have to keep going into this conflict. And then the death toll is rising. Inside Iran, more than 1,000 people have been killed. So again, this is starting to become a bigger war. So here's the stock market. This is the S&P 500. As you can see, Afghanistan war. This is where it started, and this is where it, 917 days. Now the war kept going and going, but as you can see, it dropped significantly after 9/11, all that, and it took 2,450 days for it to recover. But it doesn't mean it took that long to make money. If you were buying down here, you were buying down here, but if you consistently bought throughout the whole drop, then you made money the whole time it was going up. Then we go to the Gulf War. This one was very minor, right? Gulf War, 15% in 70 days. As you can see, it already had a couple weeks of going down, but then it just continually dropped. And it took 189 days for it to recover and kind of not look back to those prices. What's this one? Vietnam War. Like I said, this one actually was on the rise, and it continued to go up, but then it had a bumpy ride. It kind of kept bouncing off this point, right? And so it took actually 945 days for it to actually just keep going. It just, once it reached that point, and it just never looked back, right? So even though it didn't really lose a lot right away at all, it took a long time for people to make any kind of money. And then the Korean War, again, this one was very minor, 12% in 28 days and 0% in 168 days. As you can see, it was pretty minor. People were making money, or you were at least able to make money and not lose too much money. And then Pearl Harbor, of course, that happened right here. The war was already kind of going on a little bit before, but Pearl Harbor was the big one. And then, of course, the immediate drop, 20% in 147 days. 0% in 378 days, but then, stock market continued to rise and rise and rise. So I guess the whole lesson, the story of this is that the wars don't really necessarily at all mean the stock market's going to collapse or crash. There might be a correction, a little bit, it might go down 10 to 20%. We'll see how deep this war goes. But if you do look at the charts, they're all buying opportunities, right? If you bought during any of these big crashes, that was just a buying opportunity, so if you start to see stock prices go down, 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 that's more of a chance to buy, because historically these wars are not going to last. Even if the war lasts, like this war, the Afghanistan war, lasts until 2021. Let me do this right from where it started and to where it ended. 2021, it was up about 190%, right? And that's going, it went 4,500 days without making any money, right? It went 13 years without making any money, including the great financial crisis. So to make 190% after the longest war we've ever had in history, right? So assuming that this is not going to be nearly that big of a war, you should assume that stock prices are not going to crash that much, and they will go back up. So that if you are seeing any stock prices that have crashed, you might want to pick up a few shares. That's just my 2 cents. But yeah, that's just really quickly how wars can affect the stock market and the prices. So again, go ahead and give it a like and subscribe if you can. I really appreciate anyone that's still watching. Stay safe out there, and don't forget to earn it, save it, invest it,
Buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.